Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, the 9th. Man, we got a lot. Okay, so this morning charts, we're just going straight there. You see it there in the upper left. Look at gold. Holy crapola. What the heck? So on the open, man, when you really look at it on like a longer term perspective, it's really like, wow. Okay, so we were closing at 1800 last week and we've kind of been drifting sideways in gold there for some time, and right on the open, I mean literally right on the open, fire sell down 100 points. It has now recovered. The liquidity is recovering, but what is going on over there? That is nuts. All right, let's go back here to the E-mini. So the E-mini actually down on the open as well, but recovering fairly nicely. Treasuries gapped lower as well. Okay, so I think what we have going on here in gold is it's probably a long, over leveraged, getting creamed by the interest rates rising, and for whatever reason there was just a fire sell on the open. I'm wondering if like their broker came in and sold it for them or something, because you wouldn't want to execute the way that happened. All right. What about oil? Oil also gapping down on the weekend. Man, and silver, so brutal. So brutal. Copper down. What about the dollar? Is the dollar up? The dollar did take a pretty good jump, actually. That's a really big weekend gap for the dollar. So we've got a really odd situation here, right? The market has moved significantly over the weekend. We don't really have a direct reason for why. What we can see from the chart suggests to me that it had moved just enough over the weekend to, stop some people out, create some order flow, and then it just kind of steamrolls from there. Oh, this was last week's. Man, we did so well last week. I'm not so sure we're going to do as well this week, but we'll see. We shall see. Oh, you know what I was doing? I was looking at it and it was like, it was so ironic. Oh, I already got rid of it. That's funny. The thing that was ironic was like, as soon as I stopped trading that combine, and then I had 1 week that would have passed combine. I was like, what? Anyways, let's move that out of the way here. So let's see here. What you got to see? What we got up here in chat? Oh, let's turn on the text to speech. Oh yeah, Bitcoin. We need to talk about Bitcoin too, right? Because Bitcoin is over the last few days has kind of been on a tear. So it was not long ago. Well, I guess it was a few weeks ago when we were down in the 30K level. And you could kind of see a little bit of positive flow coming in. And now, like, they're doing it again. I don't know if we've been getting the tether prints, but Bitcoin looks very bullish right now. I'm going to say, though, like 45. Well, let's see here. Now I have to come back and look. Well, let's look at with Friday's numbers, shall we? I've been doing this for so long that I have so many folders here created from the charts. Okay. Okay. So kind of somewhere near the all-time high. I think what may happen here, I mean, this is all just the guess. It's as good as anybody else's guess, right? Because remember, past prices don't really have much effect on future order flow, right? But we kind of had this sort of a thing, and then we had a bounce, then that was kind of a little more like a murmur, but and then a dip. So we may be somewhere in here. Like, we didn't really get this kind of a bounce, but we may be right here. So we may be getting a spike. We'll see. I think that when I run it again, we'll see another little spike up to there. So maybe we're getting close to the upper range of what they can do, but we'll see. We should check here. Have they been printing Tether? Oops, I'm sorry. Okay. Sinful Sophistry says Tether is printing again. Whale alert. And how much did they print? $1 trillion. No, 100,000 million billion dollars. 1 billion USD inventory replenish on Tron network. Note this is an authorized but not issued transaction, meaning that this amount will be used as inventory for the next period issuance requests and chain swaps. Inventory replenish, huh? The Buttcoin guys are like, are we in for the last hurrah? Northern Soul songs, documentaries, and music. Oh, thank you very much. So you have no idea. As of this moment, I'm still not sure. Other than just a stop run. Let's see if Zero Hedge has any more information on it. Nikola founder Trevor Milton dumps $77 million worth of stock. Good grief. Nope. They see. I still see no explanation. So like the kind of when I say like explanation, I'm looking for like this fund had a gold position and they were margin called, and so their broker immediately on the open went out and sold all of their shares on the open market. That sort of a thing. I mean, it looks like a fire sale. You say flash crash. That's certainly. Oh, you don't have to switch accounts. I just thought it was a funny name. Thursday Gold had a failed breakout and had only dropped hard from there. Yeah, I don't know, man. I don't know. The thing is it's probably one major person dumping. And why would they do that? There certainly was this whole thing that like it was looking promising, like it was looking like they were going to finally jump out of this range, and then they didn't. But here I am. Oh, okay, cool. Well, thank you for joining either way, whatever name you're using and however long and ridiculous it is. No, that's when I say like why, it's like I want to see, you know, who puked. Or it's probably somebody. I mean, the thing is I don't think that it was based off of any news or anything. But, you know, if you were liquidated and they, you know, I tell you, the broker, here's the thing, is when a broker holds something like that, you know, like they're not happy about it. I don't think that the broker loves coming in and going, oh yeah, it's time for that stupid guy his stupid trade. Finally, we get a margin call him. I don't think it works like that. I think that it's quite a burden on them. And I don't know, like do they sell in a way that is very disadvantageous on purpose, just to kind of burn you? India appears to be selling off gold. Okay, so are you saying the country or just the Indian markets in general? It was a quiet news week. Maybe just someone was trading bad. Yeah, it could be. Like, that's the thing. Like we got to remember, and I'm constantly trying to remind myself this, because we want to read into everything, right? That what really tends to move price is new orders, and the things that are going to be the most predictive are the things that are able to predict new orders, which is really crazy hard. And apparently past prices don't really have a huge effect on that. So, but that kind of means that, yeah, you could get these crazy unexplainable moves without any reason. Like, it would not surprise me in the least bit if by the end of the week gold was right back up to 1800. I'm not saying that's a prediction. I'm just saying, like, that would be like the most inexplicable crazy thing that would tend to happen. Like, just, maximum irony is they get stopped out and then it would just go, just like it was with interest rates last week, where interest rates were declining and somebody got stopped out and then they turned back around and increased hard. You're making a killing on your Dodge. Well, they're not as high as they were before though, right? The crypto market does look like it's kind of getting ready to do stuff. Coin market cap. Now you got to pay a lot to get a good value for gold. Well, when I see these moves, like, the first thought in my head is like, oh no, is the getting away from paper gold actually hurting gold? So remember, there's been this whole thing where, like, if you want to own gold as a hedge in your portfolio based on the new Basel, whatever they call it, it's not Basel, but what replaced Basel requirements, you can no longer hold paper gold, you have to hold physical gold. And so there was some people saying, this could be good for gold, this could be bad for golds, etc., etc., etc. Well, I don't know. I don't know if that's what's going on or not. It's hard to say. It's hard to say. But Bitcoin. So we'll pull up the Cyanide coin, and I think Arlet coin is moving up again too. Let's take the Garlet coin from a 1 month period. Oh, okay, that's just where it's been. But 5, 6 is a little bit better. Be nice to be back to 50 cents, but... And then... Oh, no, not Cycoin. Why did I click that? I wanted the Dogecoin. Where is it? Dogecoin, right there. Oh, yeah, are they taking a run? Well, if you want to take a position and actually position, it's still hard to say if in the near term it will be worth more than what you pay today. I think that if gold is going to take off, what's going to have to happen is we're going to get like a taper tantrum here, and then the Federal Reserve will kind of have to back off, and then maybe gold will start to pick up on that one, Because there's this dynamic between... Is the inflation transitory? And then, but what if we raise interest rates? And so gold is kind of not doing what it would expect to, because the correlation with interest rates is stronger than but we are getting the inflation sort of a thing, right? Well, It's kind of tough on that one to see, because in the larger scheme of like on a 1 day chart, it looks great. But then when you kind of go out, you kind of notice that it's just a little blip. Will we see? I did not come up with that term, Win. That is, we have had two taper tantrums last cycle. They were very ugly. 2016 was the taper tantrum. I remember it well, and it was quite dramatic. And markets struggled all that. I do not have my water bottle today. I couldn't find it, but it's broken anyways. I need a new one. Federal Reserve would raise interest rates quicker than expected, increasing the opportunity cost of holding non-interest bearing bullion. Yep. So if there is long-term perceived term value, there's a perceived long-term value in gold rather than investing in a hard or bearish stock. Yeah. Well, it makes you wonder, like, what if stocks turn down? Well, how does that play into all this too? I don't know. Treasury is pretty quiet today, by the way. I think we're going to be doing some programming and research today. Yeah. Should use the mug. If they could give me a glass water bottle. Maybe is well. I'm gonna bet you if I'm gonna. I don't. So when I'm saying stuff, like, I want to be really careful. I'm not trying to make predictions, okay? Because what I don't want is people coming back 3 months later and saying, "Oh, well, you predicted X is gonna happen, and it didn't work out." Wow. Because I don't want you to think that I have some sort of predictive ability, okay? But if I was going to make a trade on it, if I had gotten 1700 off of that open, I'm going to bet that you'd be happy with it by the end of the week. Of course, because this goes one of two ways. One is that that's just a temporary blip and it's going to go back to 1800, maybe even test the other side of the range and break out. Or it's going to come back to the even and then it's going to continue falling down because of some sort of a trend rather. You know? Like, but same goes down for catching the move down, wait for it to previous highs. Yeah. But I mean, that move, that is a large meta order move, and everything that it does to the order book and everything, it's chances are it's going to suck it back up in the short term. But then, you know, midterm, maybe it goes down lower. I'm not sure. Speaking of predictions, I am watching 700k people who are maskless wander around Sturgis. No one is masked and the crowds are at a record high. Oh, really? Well, I've been seeing lots of stuff. Hold on, I need to blow my nose. Same thing happened last year. Yeah, it really was like the media, it plays that one up, right? That's 100% media tries to play that one up. Like, oh, them dumb Republicans are spreading coronavirus. But, you know, the one that I saw this morning that perked my interest was the study being published by the CDC, I believe, claiming that you are twice as likely to catch the Delta variant as a vaccinated person if you only have natural immunity. Which is interesting because that very much contradicts the other 2 or 3 studies that we've seen, one from Israel and I forget what are the other ones, on the natural immunity, suggesting that the natural immunity is really good. So, I don't know. The issue is I need to go and read those studies, and then even then I'm probably not going to understand a lot that's in them because it's not my area of expertise, and it usually takes a long time to develop enough background information to be able to read papers like that, you know? But all I got was like a synopsis from a news website that I had never even heard of before, so... It's predominantly, well, I don't think that that's necessarily true either, though, because there are some places up in the Northeast that are just doing absolutely terrible. Yeah. 700K people are Republican or at the very least unknown political affiliation, and then suddenly super spreader. Yeah, it totally is. And yet they will probably completely ignore the possible super spreader event that Obama had over the weekend. Although the Republicans were certainly making hay about that one. Or yeah, that when there was the BLM riots, like, I don't know, saw a lot of convincing charts that kind of showed that there was a peak after the riots and that people probably spread it. I don't know. But I don't really have a whole lot else to say. Like, the only thing I can say about it is that even people that are vaccinated are catching the Delta variant, and it does not look like... So I think that there's reason for concern about it, yes, but they were also saying over the weekend, we're not going to shut down. We don't think that we're going to need to do this. We don't think that we're going to need to do that. Oh, man, and then there was the whole Joe Rogan thing, right? So Joe Rogan is concerned that if you are vaccinated, if you have a vaccination, but that vaccination does not prevent transmission, or worse, you get asymptomatic transition or something like that, that the chances of developing like a super virus are like a lot higher. And he's concerned about that. I mean, that is true, but there's not any evidence that that's necessarily what's happening. But that got a lot of attention over the weekend. That got a lot of attention. And he did say some things that I do agree. Because to me, it's like things are mostly over. But you've still got people trying to push for draconian measures. Which is kind of silly. The age of the biker is closer to my age than Seth. Same at Disney, just more black leather and beer they have to... Well, yeah. Yeah, the funny thing is that being a biker kind of turned into an old person casual hobby sort of a thing. Maybe it wasn't like that back in the olden days, and then they all thought it was cool, and so they started doing it. It makes me wonder what millennials are going to do. What sort of things are... I don't think that millennials are going to go and create biker gangs and travel the U.S. They probably stay inside, right? I would rather stay inside. Okay, so we got some other things going on. So I got a guy on Discord here that was asking me to make a change to one of my indicators. And I think we got some time to do that. So let's do that first. And then I had a TikTok blow up again. So this time I had a TikTok where I was telling them, listen, I can show you the issues with technical analysis, like that, proving that some of their ideas, the underlying theories, are wrong. And that really took off. Like it's at like 5K right now, and videos like that, the last video that I had that went that much went much further, right? So I have all these plans for talking about technical analysis this week on TikTok, and I want to go and refine some of the sources and studies that I want to use. One, if you guys can remember, do you remember this, Uzi, where we were arguing about technical analysis with, I think it was with Blunt or someone, and I was like, here, let's go and find a study, and we went and found a study where a guy had tested like 200,000 different setups. Do you remember that one? Or it was Gary. It was probably with Gary. But I remember very specifically there was a study. So I found a study where they tested like 20,000 different moving averages. But there was one where they used a machine learning algorithm, and this thing tried like 200,000 or more different setups. Do you remember that one? Because I can't find it, but I swear it was a thing. I swear we like pulled it up here on, like we found it and pulled it up here on stream once. Okay, well this guy wants the TFC levels thing. Uzi says I remember you talking about it. Okay. I don't know why this guy wants it done like this. Like, it probably would be better to just use the charts, but multiple time frame charts, you know. Let's see here. He wanted 1 minute, 5 minute, 15, and 60. One, 5, 15, and hour. Keller says, I think I remember hearing about that average. Yeah. Well, I mean, I was just searching for technical analysis, thinking that that's where I got it on. I was like searching ssrn.com, but maybe it wasn't on that website. But that's one of the things is I've been trying to think of, like, what different search terms could I use? But I was doing it on my phone, so that kind of doesn't help. 1, 5, 15 hour. Bum, ba-dum, 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 ba-dum. Hour of 0 equals hour of 1. 15 of 0 equals 15 of 1. 5 of 0 equals 5 of 1. 1 of 0, 0 equals 1 of 1. Did we once talk about 5th edition Martin Pring? Because I bookmarked that study. No, I don't recall that. Okay. So then we come in here and we say if time of 1 dot minute equals modulus 5 equals 0, right? 1 of 0 equals open of 0. And then I think we can do that for all of these. Then we had one, already have one for that. $5.15 hourly. Then this is 1 minute. Time dot second equals 0 and 1. Okay. 5.15 an hour. And then we get rid of all of these. Oh, and then we have to change it. TFC levels. CRYFGG. That's who wanted it. Oops. Wait, where am I getting and from? Did I would intend it to be that. Okay. Well, E-mini is doing okay right at the moment, and the treasuries are pushing down once again, so I wouldn't be surprised to see us come down to lows of the day quickly. We'll do ES 1 day 30-second chart. Okay, and then I will add in this one that I just put in, which will be in here. It already does not look correct. Output. Reference not set to instance of an object in the onState changed method. Hold on. Oh man. Well, that's really interesting because I don't see anything in there that would possibly throw that error. So we're going to have to come and debug it.
Order submitted.
Of course, Jay wants to take one.
Order canceled. Order submitted.
Okay. Oh, and now it does it, huh? Hmm. Oh, that's weird. Let's move it out into the... Oh, let's come in here and change the namespace. Oh, where did it go? Oh, it's just TFC levels. Okay. There it is right there. Indicator, blah, 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 blah. Need to reload the editor because there's obviously two versions of the file and I can't refresh the... So there's already one. Oh, that's weird. When you were doing the combine, what was your daily goal? Well, I didn't set like a goal, but it was really leveraged, I must say. I was trading a full E-mini contract, so I was making 200 to 400 a day. Yeah, and usually it would only take one trade, so usually it was 400 a day. Well, something's off. Did it move? Did I get moved to somewhere else? Huh. Like it says that this already is in there, but like I'm not finding it. ls-r grep tfc. There's not a recursive operator for it? Oh, a recurse. Dash capital R. I see. No, it says that it is fine. Maybe if I do that and compile and then redo it, and it will. You never convinced me to be worried and miserable. Well, but that's not the question is, should you get vaccinated? That's really what it comes down to, Uzi. Like, you get vaccinated, and then, like, what else are you supposed to do? Don't worry about it. Okay, so that took. So then if I get rid of it again, will it let me do it now? Now that it's, like, recompiled? Did I, like, do it somewhere? Oh, dear. I see what happened. I don't know if he's miserable. It certainly irritates him. I mean, like, honestly, running around and watching the world embrace despotism because they're terrified about something that there really isn't logical to be terrified about is a little frustrating, for sure. Okay. So now let's remove the indicator. Oh, it removed it for us, apparently. Ta-da. Okay. Oh boy. Where is it? Should be right here, right? Oh. That certainly doesn't help. Yeah. I don't know if I want to step in on this argument that he's having. I really feel like that Keller has ideas about people that are not grounded in reality. Okay. So then here in TGN, I should see. Oh, nope. That one doesn't show up. Now it's probably going to show up in here, IRTFC levels, yeah, because it should be in the namespace. But then mine The one that we just made. Shows up right there. Okay, so get rid of all that stuff. So I think you need to be forcibly vaccinated. It's like there's the problem. You can't do that. You see this. Well, let's get down to the base of the argument here. Keller believes that it's okay to remove people's bodily anatomy if the government deems that it's necessary for public health, and Uzi believes in the Constitution and that you can't do those sorts of things. And I tend to agree with Uzi in the Constitution. Do you see? And I don't care if it's that people are being irrational or if it's harmful to other people or whatever. You can't come in and just say, we're going to force X thing to happen because we think that it's better for everybody. Because then you could use that argument for literally everything and you could control every portion of people's lives. That is not the way that the world was worked. That in my view of the world, that is like contradictory to God. God put you here on this earth so that you can make your own decisions. Forcing you to do what would be the appropriate thing, that is what Satan wants. And so when I hear people come in and they start to say, well, you should be forced to do this and forced to do this. No, you're talking evil. You're talking doing evil things. That's literally like that guy in the superhero movie that he thinks he's the good guy, but he's actually the bad guy. That's what this is. That's what I hear when I hear that argument. Okay. Where was I? Okay, making sure that they're in the right namespaces. Well, then prepare to get a disease. No, we're not going to die from it, Keller. The death rate on it is like 0.2%, and the only people that are dying from it are 80 years old, and we're not 80 years old. Okay. So trying to make people scared about it is like little ridiculous. It's a little ridiculous. And you've already had it too? Well, there you go. Okay, there it is right there. So now I got to make sure. Reload all. Now I got to make sure that we're attached to process. That's not true. People of all ages are dying. Over 90% are like what do you think the distribution of death by age is, Keller? Did you realize that it's something like 90% of the people that have died were over the age of 80? Yeah. Some people have died that were in their 20s, but it's like infinitesimally small. And they are going to have other, what is the word? Complicating factors, right? Like they're overweight, they have heart problems, that sort of a thing. Okay. Can we get it to do the break? I think we did. Yes, we did. Okay. Continue. Most people can see the point in getting vaccinated, therefore it will not be a problem. Yeah, I mean, we're almost as like, we're over 60%, right? I'm way more interested in, though, how effective is natural immunity, right? Okay. Let's try this again. Remove. Okay. Oh, wait, I changed that. Did I not save and rebuild? Let's save and rebuild it again. Oh, fuck. Okay. I know what I did wrong. Need to just freaking close that. Okay. Right here. Whoa. I must be early. Oil is staging a comeback? Oh, they're doing okay. Call me when gold stages a comeback. Come on. Ugh. I have some silver. It's ugly. It's not very much, and I intend on holding it for a while, and I think that I should continue to hold it, but it's ugly right now. It's very ugly. Okay. Gold went poop. Yeah. It's just a crazy. That's what we got there in gold overnight is one of the craziest things I've seen, man. One of the craziest things I've seen. Oh, the chart control is null. Okay. Well, I think that gold could still be a good trade going into the end of the year, but when you look at the supply and demand dynamics in gold that we've been having, and you say the reason gold is coming down is because of concerns over the Delta variant, which I think is a reasonable explanation for it, then, once that Delta variant is passed, gold should be a favorable trade again, right? And in the meantime, I don't think that it has to be a disaster. It's just it can go kind of sideways. So. That's a little better. Okay. Come and fix this one. Not that one. This one. And just change this to chart control, not equal no. Okay. You say only -1% gold? I don't know, man. It's just a crazy. So we're gonna find that somebody got blown out, right? We're gonna find somebody was liquidated. Okay, now let's upload this to him. Where do I put it? NinjaTrader 8. Bin custom indicators. Try this. Okay. Stop debugging. Close that. Don't save. Minimize, close, close, close. Okay. To the research. What would be the word? I don't think that it was machine learning, but computer assisted? I don't know. Technical analysis. I think that's the one I already looked. Candlestick technical analysis. Oh, this is the one where it's like a whole book. Future research must address these deficiencies in testing in order to provide conclusive evidence on the profitability of technical trading strategies. How do you get rid of the highlighting here, by the way? Like if I close it and I come over here and I do that. That's so weird, right? Or what if I open up in a new private window? Does it go away? It does. Weird. Well, we cannot rule out the possibility these trading rules complement each other. Market timing. We do show that over 500,000 trading rules do not add value. Blah, 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 blah. That one's not too bad. Do you think the move today is going to be tamer or wilder? I'm not too sure, to be honest. So, like, the big question is this move in gold going to, like, be contagious? Like everything did kind of move there on the open, but since then they've kind of been doing their own thing. So I think that suggests that they don't have to. But I don't know. We'll see. Oh, you know what we should check here is like citations, references. Oh, these were where they cited it. Must not be because some of these were before. Anyways. Like I know I'm gonna know it when I see it, but I'm gonna make sure that I've got this over in the right spot. Okay. Maybe I can say technical analysis trading rules. Technical market indicators, an overview. A comprehensive look at the empirical performance of a data snooping free test, eh? Numerous empirical studies have investigated the profitability of technical trading rules in a wide variety of markets, and many of them have found positive profits despite positive evidence about profitability and improvements in testing procedures. Skepticism remains widespread. This study tries to mitigate the problems by confirming the results of a previous study, then replicating the original testing procedure on a new body of data. The results indicate that in 12 futures markets, technical trading profits have gradually declined over time. Yep. Yep. Like I ever remember reading that abstract. This is a different one. This isn't the one that I'm looking for. I swear it was like a one where there was like they had tested. It says in the abstract that they tested like 200,000 different strategies. Maybe it's in Gary's book. Should we try it looking in Gary's book? One of the kids has a little alarm going off upstairs. This one is the illusory. There's one. I already have that one. Studying 25,988 trading strategies that we find blah, 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 blah. Almost all these profits vanish once the data snooping bias is taken into account. We also showed that out-of-sample tests can have severe data snooping bias too. Overall, we find that the profitability of technical analysis in emerging foreign exchange markets is illusory. Man, I might need to, if that doesn't stop here in a minute, I'm going to have to go up there and find it. Maybe he mentions one in like another one, because I swear he did one where it was like there was a study where they had like 100,000 different like the thing that I think is so great about this book that Gary wrote, by the way, is that like he goes through a pretty good rundown of like why a lot of what technical analysis believes is wrong, but like there's like more stuff than that as recently kind of they've found. Man, these bonds are a snooze fest. By the way, good morning, Ace. Now, gotta find it. Well, I may have to give up trying to find it. It's like study over 200,000 trading strategies. See, but if I search for like that, it doesn't. It just returns trash. Google Scholar. I'll be right back.
Order filled.
The girl's phone. Like the J stopped out. Yeah. So when he took it, I was like, you heard me sound like, okay. Don't think it's a good trade. That's okay. It might have gotten filtered out if we had it going when we turned it on when we were supposed to. Man, how am I really want to find this study. How am I going to find it? Literature Review 2017. Oh, that's what I should do. Okay. Should come back to SSRN. And I should say search profitability of technical analysis. And instead of dating by downloads, I should download by date posted. Of, it's going to show me everything with the word of in it. Oops. Even in emerging markets, technical trading is hazardous to your health. Wait, let's close some of these. So, where did I pull out? I don't know where it went. I'm just gonna pull this one out and move it over here. Okay. Tommy says, feel free to find a link. Yeah. Well, so for those of you that missed it, I had a video on TikTok. Well, here, I'll just show you.
I never sell when the stochastic car is 0. You should never.
Is he serious with this chart? Like, I've watched that 20 times. I think he's serious. Let me help you out for those of you that haven't seen this cycle
Lincoln
before.
says Iran must be held
Get these
accountable
guys
for
and
the
make
tanker
these
attack.
big technical analysis predictions. Then they end up being wrong and all of their followers leave. Then you get these guys that point out why they were wrong and how their analysis is better. So then you follow that guy until he ends up being wrong about something big. Let me tell you the big secret. Technical analysis doesn't work. Now, the proponents of TA will say, well, it works if you just know what you're doing. But the research shows that many of the key theories about markets that technical analysis proposes are just wrong. Orders move price, and those orders have very little correlation to what the current price is. So this week, we'll be going through the evidence proving why technical analysis doesn't work. Follow for more. Is that a piano behind you? Yeah, I recorded it in my parents' house. So, yeah, they have a piano. But yeah, all you'd have to log in to see the comments. But you see 222 likes already. It was popping off. So I'm gonna make a bunch of videos all this week showing this kind of stuff. And the thing is like I can come in and I can show, okay, you do this strategy with this trading rule, it doesn't work very well, right? It's not very effective at convincing people that it doesn't work because it's like you're trying to prove a negative, right? How do you prove that technical analysis doesn't work when you have to come in and say you would have to be able to prove all technical strategies and prove that they all don't work, which is impossible, right? Because there's an infinite number of strategies. So what we can do is I can show you the ones that they've done these studies and they've done all these different things and they find that most of what people think they see as technical analysis working is just data snooping bias. But really the ultimate way of going about this is looking at some of the key ideas about how markets work that technical analysis believes that aren't so. Right? Like showing that prices is inelastic. Okay, so this one was Okay, so that one's interesting, but that doesn't really tell us what we're looking for. This one's a data snooping problem. Can already see from what they're doing. Bayesian statistics. (2011). We're already 2011. Maybe it's this one, a bootstrap approach. In this paper, man, they selling this thing pretty hard, aren't they? Well, I think that answers your question earlier about do you think that it will be harder or not? I don't know. Should I sell it there? I don't know if that location is very good just from how it's behaving, but I'm more interested in this, so maybe I'm just not going to take a trade today. We'll see. No, hang on, fam. I got you, dude. So here's what happened. Like the baby was oh my gosh. It is like all I'm doing is just sitting there watching him, but it is so exhausting, and it is just like extra clingy once mom's gone, I guess. But he was having all sorts of fits and stuff, and so Grandpa took him outside, which can't really stay outside because there's so much smoke from Oregon right now out there. It's just not healthy to be out there. And so while Grandpa had him, I was like, I have this idea for a TikTok. I just saw a video to stitch. Because really, did you see that? Let me go back to it. Look at this guy's chart.
I never sell when the stochastic car is 0. You should never.
No.
Is he serious with this chart? Like, I've watched that 20 times. I think he's serious.
That's so annoying.
I never sell when the stochastic car is.
Okay, look at this guy's chart. It's crazy. It's like, how are you? What? Like, what? Your inside air is the same as your outside air? That's not true. There's a filter on the air intakes. I couldn't believe, and I was like, is this a parody? Because I've made videos like this. There were parodies. So the whole thing here, this is what kind of makes it interesting, is that there's some guys, I think one of them was Pablo, and the other one is like, I don't remember the name of the other guy, but there was some cryptocurrency gurus that had been making some claims about that Bitcoin was going to dip below 20K, which is an idea that I am partial to. But, you know, I try not to make predictions. But, you know, I was saying I think that probably will go below 20K. I actually still think that there's a really good chance that it will happen. Anyways. Is he at an art gallery? Right. It was like, oh, this is just too good. I have to. I mean, I don't intend to be like harassing this guy. I'm just telling you. It's like, okay, so you got these guys. They make a technical analysis prediction, and so then he comes in and he says, "Well, like I'm better at technical analysis than they are." I was like, okay, dude. Because every quantitative study that you look at it says that it's just data snooping bias. So like, that's probably what this guy's got too. Wow, this somebody was showing me a link of a video that took off on YouTube that they made $18,000 off of it about day trading. Anyways. Oh, maybe this is it. Oh no, using this approach, we generate thousands of new exchange rate series conducted by random reordering. Okay, no, but that's still not what we're looking for. Re-examining with data snooping checks. No, that one's, again, so it's like if they don't mention anything about data snooping, then it's probably like a useless study. It is also found that complex trading strategies are able to improve on the profits of simple rules and may even generate significant profits from unprofitable simple rules. But they're also saying that, like, after taking transaction costs, we found the best rules for NASDAQ. No. They're saying it's found significantly profitable rules in young markets, but not in data from relatively mature markets. This one is the kind of like the summary one. I'm going to keep this one. This one's. So here's what this one they're saying. Our results suggest that the degree of market efficiency may be related to market maturity. It is also found that investor strategies are able to improve on profits of simple rules and may even generate significant profits from unprofitable simple rules. It's pretty confusing to see stops when they are mixed in with longs. Well, like that's the issue is like it's really hard to see to really know what's like a stop and what's not. You know? Like to me, it's like if it touches price and like it instantly goes, then I'm pretty confident that that's a stop run, but otherwise hard to say, you know? Well, like this one is interesting to me, but I would have to read it. It doesn't look like it's available. Because I want to know, like, what are the strategies that they tested? How many did they do? By the way, the bond's backing off significantly, so maybe the E-mini is done. I swear it was a test of like 100,000, 200,000 different strategies. You bet that a lot of retail lost money on that? I don't know. Like, so far, what we got is pretty typical, though, right? It's a little bit of a boost right on the open, and then like a really ugly dip, and possibly a recovery and push to new all-time highs. Let's check for Zero Hedge and see if they've got it again. He says, really? No, like it's done this so many times lately, right? China surprises with unexpectedly strong inflation as GDP shrinks. Nothing yet. It might. No, we might not get it until the end of the day. I'm so frustrated that I can't find it. Oh man, I still get people from China on this one tweet, this one argument on Twitter with the state PR guy. That is insane. Well, I'm out of ideas. You guys, I'm not crazy. Like, you guys remember talking about that study, right? It was like the guy had done 200,000 different strategies. I don't know. I've tried hundreds of thousands of strategies before, so. Okay, well, the E-mini come back here. So my issue is I don't necessarily have any reason to think that it's going to continue to do anything. And the liquidity is a little suspicious. Well, let's put this stuff into Evernote. This one. 26,000 strategies tested. Review says data snooping must be addressed. And profits decline as markets mature. even in emerging markets, unprofitable. Okay, then I want to get into, let's see here. I wonder, maybe I downloaded it. Let's see. No. No. Oh, that one was good. Yeah, this is the Benford's Law one. I guess I didn't. Okay, well, anyways, let's come down in here. I wanted to look at you know what was after this? Ah. Nope, I went too far. I missed you mentioning what you're looking for. Specifically, you're not looking for the paper titled Technical Analysis in Financial Markets, are you? So the paper that was looking for specifically tested over 200,000 different strategies. So let's put it this way. Let's find a strategy that tests the most different strategies in it. And there was one that was like 200 100,000 made by machine learning. No, I should move that out of the way so you guys can see. So there are a little bit more volatility coming in here. But at 8 o'clock, oh, I don't know, man. Today, I think that the real move was to go short on the open. I don't think that there's any way that I would have necessarily have seen that coming. So... Well, I thought that there was going to be a couple of studies that he would cite in here that might have been useful, but I don't think that we really are getting that in this one. Well, the treasury's coming down there still, though. Are they going to push to new lows now? Okay, so I didn't see what you guys have been saying. How do you test a technical system when there's a lot of discretion involved in the implementation of the system? Well, like, that's exactly the issue, right? So so let's come back over here and let me show you how I'm going to do this. What I think I want to how I want to approach it. Okay. So first I want to go, okay, most after adjusting for data snooping, studies show technical analysis is not effective. All right. So that's the first thing, is like, we could say here, I've tried this one thing, but of course you can still say, well, you didn't test the one that actually works. Okay, fair enough. The next argument is technical analysis traders do worse. So there are studies showing, for instance, there was this one study from I think it was a Dutch brokerage firm, where they polled their, when they were setting up their accounts, they had to answer questions like, do you use technical analysis in your strategy? And so you could see what people were basing their trading off of. And they found that the traders that used technical analysis took on more risk, traded more often, and made less profit. Basically, they did worse because they were using technical analysis. So that's the next step. But here again, it's like the issue is still like, what is technical analysis and what's like the proper way of implementing it? So that's when, to really disprove technical analysis, I think that the only way that's really effective at showing that is to get at the heart of the assumptions that it has about the markets and showing that those are incorrect, right? So, and then that gets into when market is competitive. Okay, so when we look at the market models that we have that seem to have some efficacy in explaining certain known observed phenomenon in stocks, we find that the market is like statistically efficient, but informationally inefficient. So that like any kind of like statistical arbitrage pattern that you could find on a short term tends to get taken out of the market very, very easily. And when you go through and you run many of these studies where they test different rules, they find that like they work really well up until the 70s and 80s, and then after that they're not as effective, suggesting that perhaps there was some edge in them, but now that edge has been removed from the market, right? So that's your first kind of step of way of taking it, is that the market is competitive. Effective trades get arbitraged away, right? The next assumption here is that they believe that the market is efficient, but the market is not efficient. So technical analysis posits that a chart has all of the known information out there about a security that is known, and it's all been priced into the price, right? And so when you see the chart move in a certain way, that is reflecting information about what people think about the market, right? Well, what we find is that the market is not efficient, and that a lot of the order flow is random. and that random order flow has a very significant effect on the markets. That like how much a trade moves the market is way more than would be justified from an individual trade, essentially. Okay, so what you're actually seeing in the chart is not really a reflection of information at all. Most of what you are seeing is noise and orders moving price, even though there's no informational content in those trades, right? So the market is not efficient. And the third thing that I would posit is that price is inelastic. So basically, we are finding that the current price seems to have no correlation to how much new orders are going to come in. That if price is really, really high, that in the S&P 500, like if the S&P 500 is at all-time highs, that it does not affect the demand at all. If they're at all-time lows, it does not affect the demand at all. And that really what's happening is people have money, they put it into the markets every month, and that results in orders being placed into the market, and those orders have an impact on where price is going. And that mechanism that is creating those flows that have absolutely nothing to do with the current prices, right? You could predict those orders by saying, well, the government is putting out stimulus, or the government, people are making more money, so they're going to have more money to be able to put into their 401ks or whatever the deal is, right? So on longer time horizons, you can try and predict those orders coming in, but it has absolutely nothing to do with the current price. Hence, price is inelastic. It's not, the supply and demand is not correlated to the current price, right? And those are these kind of things that technical analysis claims. These are like the basis for technical analysis, right? And what we see that from our research on the markets and what we understand today, that they're wrong, right? That there isn't actually a lot of, there's a lot of price movements that are not based on information at all. Well, I was thinking about maybe trying to go short in the treasury, but they kind of slowed down again, and the E-mini is just kind of skidding along here and not really doing much. So even though I think that there was some opportunity on the open, the kind of movement that I'm getting right here kind of suggests to me that it's a crapshoot. No. How are charts formed? They are formed through buyers and sellers trading. Okay, but it's true, orders move price, right? But you're saying that technical analysis is an interpretation of human behavior and psychology. You're suggesting that those price movements have informational content that tell you something about human behavior and psychology. And what we're finding is that orders have such a dramatic effect on price that random, just like literally random noise will create price movements even though they have no informational content in them, right? So even if their, human behavior and psychology does affect whether people buy or sell, you can't really see it from a chart because the orders create too much noise to see it. Does that make sense? Or, do you understand the argument that I'm making? Right. So let me back up and let's say, what does technical analysis believe? Okay. Technical analysis is the use of past prices to try and forecast future prices. Technical analysis believes that there is informational content in charts that the market is, generally speaking, very efficient and informationally efficient. And as such, looking at a chart gives you information about the market and what people believe about the market, right? And it's very difficult to gain an advantage through that, but you can use that information to catch trends, is essentially the general belief of technical analysis, right? So the first thing is that they claim that markets are generally efficient. And what we find from the empirical evidence, and this one is very, very clear now, is that the market is not efficient. It's not very efficient at all, in fact. And the more we get into it, the more shocking it is, where we're like, okay, if you put $1 into stocks, you sell a bond and you put $1, it increases the market cap of the overall stock market by $5, right? So like one teeny tiny little order has a way huge outsized impact compared to what you think it should, right? So it's not efficient. That's the first problem. And then the second problem would be that, if it's not efficient, then how can the chart have informational content in the prices, right? Well, again, because the market is so inefficient, those prices mostly represent noise. That a small number of orders that have absolutely no informational content in them at all is going to move price, and it's going to move it a significant amount. So like this thing here in gold would be a perfect example, right? Gold moved down like big time. So does it tell us something about what the market thinks about gold? Is there informational content in that move in gold? Well, there could be, but it could just be somebody getting stopped out, right? It could be they don't, that these guys would still prefer to be long gold, and that gold is going to reverse and it's going to move back up, right? We don't really know, because it's just somebody stopping out. So is somebody stopping out, is that really informational content? It's not, right? But that's the thing that's kind of interesting about it, is that it's prices. Prices is the thing that I think is kind of at issue here, right? Because clearly orders can have informational content, right? So then the question is just, how do I filter out to determine which orders actually have informational content, right? The market is not random. Well, I wouldn't say that it is random, but there's a lot of randomness in it. So like when we say the market is random, what do we really mean? That there's no informational content in the markets at all? No, that's certainly not true. Does it mean that there's not going to be any kind of, that it's just a Gaussian distribution, that prices should accurately reflect a martingale or a random walk? Well, we know that that's not true too, right? We've found a number of properties about markets that do not match a martingale or a random walk, like that volatility clusters, that orders cluster, that there's a square root law of order impact, that there are certain inefficiencies that can be explained by just the way that the markets are structured, right? And so from that perspective, the market is not random. But from the perspective of, are prices reflective of, truly reflective of information that we can use to determine the future trajectory of prices? It doesn't. As far as we can tell, or the evidence at the moment suggests, of course, I would still posit these are theories, but the way that the research is going suggests that the prices just don't really tell you a whole lot of anything. Strategy doesn't work all the time. Perhaps the random, even if you talk about it, is when the strategy doesn't work events. Well, so I think that there's kind of like this error. So a lot of strategies that I've tested kind of have this error compensation for of sorts. So like, here's the thing. We would expect the market to try and arbitrage out any kind of statistical elaboration in price. So if we have a signal, a certain setup means something, we should expect the win rate of that strategy over a long enough time horizon to equalize out to 40-45% to account for the spread, right? Well, there are certainly some signals that do not hit those numbers, right? Like there are things that just, they don't happen very often, or they happen a lot, right? And it's like, there might be actual real reasons why those things happen. And so it's not possible for them to arbitrage it back to a random trade on win rate. So what happens instead? You'll have a 30% win rate, but when that thing happens, because normally a certain thing would happen, but when it doesn't happen and that trade fails, then it goes a lot further, right? But the degree to which it goes generally over the time should still compensate for the risk that you're taking and everything, so that it basically comes out to a break-even trade again. Yeah, it's random in the sense that even if there's informational content there to back the move up, you will get stopped out regardless of how correct you are, because there could be dumb order flow. Exactly. Like I think you understand it exactly. Is like, you could come in and you could say, the Federal Reserve is going to raise interest rates to 5% tomorrow, right? And you could know it and go short the treasuries and still get stopped out by random orders. They have nothing to do with that move. Technical analysis on larger timeframes can give an indication to market sentiment, but on lower timeframes, it is not efficient. So this is where it gets kind of interesting, because I've definitely found that on a short time frame, the price just gets more and more random. Whereas on higher time frames, you can try and use like 50-day moving average, I think is the most effective, to kind of give you some idea of, you know, what the overall market sentiment is and whether we're like in a good place to buy or sell on our no risk reward situation. And if you go and you test those out, I think that you should find that some of them are profitable and even beat the market, but they don't necessarily beat the market on a risk-adjusted basis, right? So I think that what those are doing is they're taking risk, and the excess profits that you're making is the market rewarding you for taking on the risk. And it's not necessarily that moving average teases out some sort of information in the market that is predictive of future returns. Make sense? These guys trading 30-second charts are suckers? Well, I would say if you're trading a 30-second chart and all you have is that price series up, then you're probably going to have a hard time making money. But here again, there can be informational content in the orders themselves. How you sort that out is like a really big question. But as far as I can tell, that's what I think most quant firms are doing. That's why they're paying for all of this order flow from people. Even if they're not like front running it, they want to come in and they want to say, oh, okay, all of the retail traders are going long here like all at once. So something must have happened, right? Like if I get a volume spike that is all of a sudden 10 times more than any other minute bar on the chart, and it was like almost 80% long, do you think that there might be some informational content in that order flow? I think, yeah, maybe. And then for the way that I trade is I try and figure out what is going on. Is there a piece of news that caused that to happen? Like, why did that happen? Right? And then it's just getting more and more granular to see, okay, how low can I go and still pull out informational content from it? Right? So that's what we're doing with Jay. And I think that what we found was that he seems to get it right within certain market regimes, but that it's way too sensitive, and that the point at which he's trying to take trades that there is not informational content in it is just too small of a change. Yeah, Jay. The robot that we ran the combine on. So that's kind of how I'm going to go about making this argument on TikTok. If you trade time-based chart only, you will get destroyed. Only a range bar can give you an advantage in trading. Well, Jay did really, really well up until the volatility in the markets came along, and then he blew up pretty quickly. I mean, I kind of helped him along, but... So he could probably still be going, but how does the mass know about something that the quant guys don't know? Well, I think that there are probably a number of statistical information, or that there could be information in the order flow that is predictive of future returns, but that the future returns that it's predicting are so small that it is not worth a quant firm trying to take advantage of, but a small retail trader could. Right? Is the volatility adverse? Not really. Only when it gets really bad. I think I did have a filter in it to tell it not to trade, like when the VIX gets too high, but... Anyways, so a question would be about the range is if prices do not really contain much information predictive of future returns, then why should the type of price chart that I'm using matter? You know what I mean? Like seeing how far they moved in relation to what volume was there would matter. Seeing how orders react to specific price locations could maybe be useful. But the whole thing that's like, okay, we've been trading in this range and now all of a sudden we've broken out of this range, and that is significant. That's like a break of the range, and now people are going to want to come in and buy it. That's maybe there's some instances like that, but the research that I have suggests that this is not very predictive of future returns. You use a high tick chart. Well, I think that using charts that use volume or tick charts or range charts can help you analyze the order flow better. Okay. But I'm just saying, you're doing all of that and you're still looking at price, then it's probably not going to help you. What exactly caused them to lose predictability on high volatility? That's a very good question, actually. So what you're going to find is that the more bearish the market is, the more noise that is out there, from what I can see. So that's when it's like, if you come in early and you catch the early trade on a downturn, remember I say the first trade is usually the best trade. right? And especially on a downturn, you can go and you can get that downturn and then you can just hold it. And if you know why the market is doing what it's doing and everything, you can maybe make a good guess about how far it's actually going to go, and you can like really catch these runners that like really run. But if you miss that initial trade and you try getting in later, you often end up being right. You're trying to short, but you just get stopped out, right? So when markets are going risk off, you tend to get a lot more volume, and you tend to get a lot more erratic volume. And so in that situation, it's more difficult for Jay to pull out any kind of information content out of the market. And not only that, but the kind of imbalances that it looks for don't even necessarily happen. And when they do happen, they're so extreme that they end up being counter signals instead. What about the algos? They use systems, don't they? Well, this is kind of the interesting question, Koos, because we don't really know per se, right? Like, how does Renaissance technology make their money? We know that what they're doing is automated, but just because it's automated doesn't necessarily mean that it's using technical analysis. Technical analysis being defined as using past prices to try and predict future prices, right? So they could be coming in and they could be trading based off of the orders. Like, what are the specifics of that? We don't even know. So like, it's difficult to even classify it as, do they use technical analysis or not? Because we just don't know anything about how it even works, right? But one thing that we do know is that these quant firms, they love to pay for client order flow. So that's where I would say that we have some evidence to suggest that these guys that are making consistent profits out of it, that they're not, price is not the primary thing they're concerned with, right? Is there any algo indicator or any other pro indicator you recommend? Well, so how do I answer this question? I would say the thing that you've got to come back to is that markets are competitive. So if you have something that works and then somebody starts selling it and it becomes popular, then the people trading on that thing is going to arbitrage the edge out of the market. And what we find is that orders have more impact on price than we would expect it should. Okay, like I'm just saying, you come in and you say, if I go in, like this would be the experiment that I would propose to test this. Okay, you take a bunch of traders that are retail traders, and then you come in and you give them 10,000 contracts, and you say, okay, I'm going to give you 10,000 contracts. How far do you think it's going to go? And it will go further than they expect. Or let's say, when it's a really big order, it won't go as far as they expect. And when it's a small order, it will go further than they expect. Like, we come in and we're like, 100 lots, it's nothing compared to the amount of volume that we're having. But we find that even those small orders have a large effect on price. It moves it further, like it moves it 5 times further than you think it probably is supposed to go. Right? So that's an issue for going out and buying an indicator, isn't it? So if I am going to go and buy an indicator, here are some of the things that I would look for. Okay. First of all, avoid any of the fake guru red flags. Okay. That means really high pressure, extravagant claims kind of marketing. Okay. So anything that makes extravagant claims, frankly, anything that makes claims about how much money you're going to make or how great its traders are doing is a red flag. Because once you get to like regulatory points, you find out that it's not a good idea to do any of that. So these guys that are doing that are either really naive, or they're just straight up trying to scam you. Okay. So that's the first thing, is I would look for red flags like that. The next thing is that I would look for something that doesn't necessarily tell you exactly how to use it. Like it should be something about the market that you want to see, that you believe is predictive of future returns, right? But they're not going to tell you, they don't give you a strategy for it, anything like that. You just want to see, that it's actually telling you something. So for instance, my indicators, this is the way that I'm trying to go with it. I can show you these areas that price tends to react to because they tend to be the average positions for the market makers. Now, how you use that is going to be up to you, but it is showing you something. And it's up to you to determine if that thing is relevant to your trading strategy. Or like I have a bunch of things for the level 2. So these things kind of help you filter out the orders that are showing up in the level 2. So it's up to you to determine if that's useful to you. You can pull something out of it, right? And then the last thing is I would avoid anything that's like really popular. Like just straight up, if it's like in a mainstream platform, like it's an indicator built into a mainstream platform, it's probably not going to help you. What is a good win rate? Well, it depends, but generally speaking, if you are scalping in futures and you're getting a win rate in the mid to upper 40%, you're doing well. Okay. It's a very, very rare that these guys that come in and they have win rates like 60, 70, 80%. These people usually do not last. So they'll trade really well for a year or two and then they'll blow up. And then they just kind of hide their blow up is generally what happens. And I mean, I've kind of done those strategies before too. Like I didn't realize that's what I was doing, but I was taking on excessive risk and it looks great for a long time. And then all of a sudden just was like one day, oh, what happened to everything? Boom. It's crazy. The more expensive the indicator, the better it works. Yeah. Another thing is I would never pay more for an indicator than the cost of the platform. That's a big one for me. Like these guys that are out there charging $1,000 for an indicator, I think, man, listen, if you're going to be paying $1,000, you better be getting like a really good education course and access to the guy that's teaching, and they better have really solid established credentials. And AO says my win rate is 30%. Yeah. Those are always saying, like, if you're scalping, it tends to be in the 40-45% range. When you're going for a little bit longer term trades, then you get into more like 2-to-1 to 5-to-1 risk reward ratio and win rates in the 30s. Now, those strategies can work out too. So if your win rate is 30%, I wouldn't be like, oh, that's terrible, right? Price and volume, that's the only thing that matters. VWAP, delta, volume profile, and day type. Well, so here's another, this is where it gets interesting, I think, right? Is like, so when I defined technical analysis, I said it's trying to apply past price and price movement to predict future price and price movement, right? And it tends not to be very effective. Well, but I think that there's also this other thing, which is using the past to predict the future and kind of the methods that we tend to use for it. And we, as humans, have a tendency to gravitate towards those kinds of analysis. And when we're looking at order flow, we have a tendency to look for that. Right? So like day type, there are some situations where you could look at the volume profile of previous days and potentially get a really good trade setup off of it. Okay. But wouldn't really focused so much on the pattern that you're seeing in the volume profile as it is like what the traders are doing overall, where the order flow is coming from, and how they might react, right? So, you know, this is why like VIX levels, these levels for like what is the daily range based off of the VIX and what are the main gamma levels, those end up being important because they can be predictors of future orders, right? We know that if you get beyond that, their estimate for how far an asset will move, that they're going to have to manage their trades and get orders off of it, right? So we want to read order flow and look for, you know, informational content in the orders that might tell us that orders are coming on, you know, in down the line. But we should be very careful about applying the technical analysis to it. That's why I was like, well, you know, the way that we've been going lately, we'll open up, there will be a little bit of a buy and they'll very quickly reverse and turn down. And then after like 9 o'clock, it will reverse and go higher and we'll go to all-time highs, right? That's that's the tendency that's been happening. But I think that it's a big leap between going from saying, well, this is what's been typically happening, to saying, okay, so that's going to predict and I should take it because it's going to do it again, right? I would much rather have something that has a good chance of predicting future orders. It was a lot. I spent like 45 an hour talking about that, huh? And answering the questions that came into it. That's what it's going to be like when I make this next TikTok. The one thing I'm worried about is like, so if I go through and I go, okay, so here's a study that says that this doesn't work and this doesn't work. Got to make sure that they stick around for the more market theory kind of part of it. I do really well when a double distribution day occurs and we fill it in later on due to low participation previously there. Yeah. Well, I think that, yeah, for sure, those can be good trades. And that's where I would say, you know, like, to the way that I would read that is like, at that time, there could be reactions in the liquidity that might give you future indications, right? It'll come down, and then we can say, okay, they skipped through this very, very quickly, so there appears to be a lack of latent liquidity. And then maybe I take the trade because I think it's going to come back up there. It comes back to that price, and I still see that there's low latent liquidity. That's usually a pretty good sign that price is just going to get stuck there, and so I want to take my profits then, right? And that's how I kind of work it out. And what is that? None of what I said there has to do with price, in that we're looking at volume at specific prices, but it's not saying because price was here and then it was here, it's likely to go here, right? I'm not using price alone to try and make a prediction about where it's going to go. That's the thing that I think. I don't know. So I'm going to get the chance to talk to Gary. I'm going to be interested to see what he says about that. Because it seems to me that his issues with technical analysis are primarily about using past prices to predict future prices. But we'll see what he says. And maybe there's forms of analysis, but... I don't think day type necessarily matters, but understanding the flow in the creation of the day. Yeah, well, and I think it's important to understand that the shapes that you get and the volume profile are caused by what I would call inefficiencies in the market. So now how that turns into a strategy, I'm a little fuzzy. I don't know, because I haven't found a strategy from utilizing those sorts of things that seem to work. But given that there is an inefficiency, one would think that you should be able to take advantage of it, but maybe the people that are taking advantage of it are just fast, you know. Don't waste your time. They won't believe you. Well, probably a lot of people won't, but I got a lot of subscribers. Like, they were interested to hear what I had to say. Like, I think that people understood that it was like, it's not just that, like, I can look at these strategies and show that they don't work. It's that there's things that they believe in technical analysis that our best research suggests is not true. And I think I did a good job of explaining that. And I need to continue to do that so that when I talk about certain things, they don't just like turn off. But I think that I do need to kind of go into some of these other things first about like what is the research actually. Oh, that's cool. There's a little tick down. Maybe they're going to push those lows. I don't know. This is a little bit different of action here. It's not telling me anything in the flow here necessarily that says that it's going to go lower. It could go lower. It could just be random. But it sure feels like they could run here. I'm not seeing a whole lot of anything that perks my interest before it gets there. Well, okay, so that was okay. 1188. It's still kind of slow. I'm also going to try making some videos on order flow because a bunch of people were asking me about order flow type things, right? And I'm not 100% sure how to go about it. So part of the thing was I made a couple of videos about order flow, and I was like, I thought that I had this grand plan in my mind about how to go about it. Wow. Okay. So now they're pushing through. Anyways, but then I made those videos and like nobody was interested in them. They did particularly poorly. Let's say I was saying I used to trade while I was at university using technicals. When I got hired for a futures prop firm, I was made to monitor the TT Trader DOM 10-year treasury for 2 weeks before I used a chart. So I understand both sides. Yeah. Well, you know, AO, the thing that gets interesting with this is that a lot of people will say institutional traders do this or do that. But the reality is that institutional traders is actually a really wide group of people. And the way that a prop trader, a professional prop trader trades is different from how an execution specialist at a big bank trades, which is different from how a hedge fund trades. And, you know, the ones that I think are the most interesting, I kind of wonder about the prop traders. So for instance, I have a study here. Let me pull this one back out. Was it this one? No, that's not that one. Did I put it in good? No, it was the Harris. It was the Harris one, right? Harris 1998. Yep. Okay. Trading profits of the SOES bandits. SOES bandits are individual investors who use NASDAQ's small order execution system for day trading. Our average profit per trade is small, but they trade dozens or hundreds of times per week. Bandits usually establish a position before most market makers have updated their quotes and lay off the position at favorable prices through Instanet or SelectNet. It is noteworthy that they trade profitably with market makers despite having less information. Bandits keep the profits and bear the losses from their trades. Thus, they have greater incentives to trade well than the employees of market-making firms. So it was kind of interesting. And so they're saying like, okay, so here's one way that these guys traded, but it was kind of based off of flow. that they were basically looking at the order flow and taking advantage of it when the market makers weren't being very fast. Probably doesn't work that way anymore. You probably can't make money doing that anymore because that was 1995. Right? That's when I was exposed to market size and hidden orders. I remember starting at 7 a.m. to 7 p.m. It was really eye-opening. Oh, that's really interesting. But what would you say was what you used as the basis for your trading the most? Was just the orders going through on the DOM then? You were just order flow trading? But the whole point of that was like different parts of the industry trade differently. So like my guys at Goldman Sachs, when they were executing orders for clients, like large orders for clients, they hardly know a thing about technical analysis. But if you go over to Renaissance Technologies, how much do they know about technical analysis? I don't know. I haven't been there. The only way you would be able to know is if you worked there. You know? So here on the Treasury, I see that it's probably could be worth it to take some risk of going short, but I'm not necessarily seeing flow that really strongly tells me that we're going to continue to see selling. It's just that the bids look really, really weak. The bids look really, really weak. So how do they execute large orders? Well, I can't tell you everything about it, but I can tell you that reading the 2000 study by let me find it. How do I not have it in here? I have it somewhere. Almgren and Chris. Reading the 2000 study by Almgren and Chris, that would give you a really good basis for how they execute things. Dark pools. I really kind of wonder, like, how do I say this? I don't know if dark pools matter or not. I'm not sure if dark pools matter or not, to be honest with you. So, like, here's the thing, is like, you use a dark pool to hide your activity from the rest of the market. There's some volume trading at 28.5, so I think we'll go a little bit lower and then come back there. So they're trying to hide their activity. Well, this just kind of goes back to when you look at the price chart, the price chart isn't really telling you a whole lot anyways, right? So for somebody that uses technical analysis, the existence of dark pools is a big problem, right? Because what you're saying now is, oh, the people that I'm looking to, that have the information, that I'm trying to read informational content about from looking at the chart, actually transact in a place where I can't see it. And therefore, you know, how could technical analysis be effective if there's dark pools? Right? If it's with order flow, I think it's a little bit less of a problem, because in order flow, I really only care about the the orders that are going to come in and move this instrument, right? So if there is information coming from the dark pool, it's eventually it's going to make it over to here. You can see it's called a gap up and gap down. So I'm just saying, like, there's still this thing, like, if you trade a big amount in a dark pool or whatever, and then it gets out to the market and it's supposed to move the market a whole point in the treasuries, they still just can't just move there right away, right? You still have to have the order flow, and it has to move, and the liquidity has to move. So that's where I kind of get into, I'm not sure if dark pools matter. More to the point, if dark pools have such a dramatic impact on the market, shouldn't that impact the profitability of a firm like a Renaissance Technology? But it doesn't seem like it has it? Therefore, I can only surmise that, the dark pool doesn't actually impact us the way that we think it does. Well, it turned out to be a really great trend in the end on the downturn in the ZN. Again, I didn't really get a whole lot of an indication from the orders that was going to happen, just that they were plowing through prices without having to trade a whole lot. And as I've said a trillion times, the order flow on the downside tends to be different. That tends to be that the bids just don't hold, rather than there's so many orders selling that. I agree, but it's mainly used by large firms, yeah. And again, I guess another aspect to this is that, like, probably there's a lot of stuff that's trading in the dark pool that doesn't really give you informational content either, because you're talking about two really big guys trading against each other. So what does that tell you? That it's a buy or sell? I mean, not necessarily, right? Because there's two sides to every trade. That's why I love futures. Well, I feel like futures are more fair for sure. But you know what? The thing is that what we know about markets. So if the ideal world is a world where the markets are informationally efficient and that all information is factored into the price immediately and that volatility is as low as possible, and that price is the most representative of what we, the market, collectively understand that asset to be worth. If we ever want to get to that world, they're going to have to not use a limit order book, basically. And how else do you do it? How do you change that? I don't know. I can't possibly. I mean, I'm way too stuck in the mentality of the market that we have anyways, so I'm probably not going to come up with it. But how do you change that? Because it seems very clear to me, or at least I think the evidence is very strongly suggesting that the reason that these inefficiencies exist and that the volatility exists is because of the impacts of new orders. Okay, well, they are backing up a little bit, so maybe they've kind of reached their limit. I have a trade. I didn't take a trade. I spent the time researching and working for you guys, and that's okay. Because next week, then maybe we can trade the yields, right? Gmae was a great example. Oh man, I was thinking back on the GameStop thing the other day, because the people who were saying, well, what happened was the retail traders started to take advantage of things, and so the rich guys came in and stopped it. And it's like, that seems to make sense, except for that, like, you can't prove that that's what actually happened. Like, the reality of the situation is that Robinhood was not adequately capitalized. They needed more money than they had, and people were taking dumb trades. So they were going to get cut off at the knees on that, right? I think I think 100% you can't blame that just on Robinhood. But what you can blame on Robinhood is how they reacted to it. That they were not honest with investors about what was going on. They did not say, oh, we're stopping trading because we don't have money, because then that would have just gotten everybody scared about Robinhood. So instead they came in and they said, they made up this BS about protecting people and stuff, right? So then it really does kind of have to make you wonder, like, did basically Robinhood threw all of its users under the bus to save itself? That's what I think happened. And yeah, you kind of have to wonder when you're in the stocks, is that always going to happen to you? So even if dark pools aren't really an important thing in terms of, how it should affect markets in our trading, one still really has to wonder if markets are kind of rigged against you. If you're scalping and your win rate is 70% and your winners are average 200 and your losers are 320, is that a good ratio? Well, so you could go in and you could do the expectancy, and you could say, based on your average winner and loser, what is the break-even win rate? And then any percentage that you have beyond that tends to be good. But you also got to realize that because your losers are larger than your winners, that kind of sets up certain properties about your strategy that you might not like. Okay, your drawdowns are going to tend to be faster and deeper, and like your probability of just absolutely blowing out is a lot higher because of that. Because when you're taking, and the other issue, and the one that I think is larger, is that you're trading because you think that you have a signal. When X thing happens, there is an increased probability of me predicting the future returns from that point, and that's why I'm taking a trade. But when you win, was it really because it was you had a signal that was predicting future returns, or was it because you took on more risk because your winner is smaller than your loser? Right? You can't know. And so then what happens is you get this belief in your head then that, oh, this works. And then when it's not working, you can continue to use it, and to your detriment, right? Because you've built up a belief in your mind, because you think me winning means that it works, when that's not really the case, right? You're more likely to fool yourself if you're using a high win rate. And that's a major reason why I wouldn't recommend them. Okay, that was a really aggressive buy there. Well, I feel bad that I missed that move in the treasuries, but I don't really feel like there's anything that I could have done. I mean, I was watching it. I mean, I had it there at like, what was it, 30? And I kind of said, well, maybe they're going to go for lows and then they could just run. You know what? In past days, I might have even taken that, but it was just really lax. Like, I wasn't really seeing anything that told me. But I guess we should be a little bit more. I think given the circumstances, that I probably want to be more willing to hit that, just because we know that the interest rates are probably going to rise, and that everything is in favor of the treasuries selling. And so, sorry, did I say fault? The interest rates are going to rise. So it's probably easier for me to justify hitting into those new prices on the expectations that they're just going to pull. Okay. Do you just trade treasuries? Well, lately I've been focusing on them a lot because the micro treasury futures are going to come up, and I really want to work on those because, it really allows me to take a very, very minimal risk. And I don't really like taking it on a ton of risk, to be honest. I do trade the E micros sometimes too, but a lot of what goes on over there is random. And so I've been limiting what I do over there a lot. Oh, man. Okay, so today's stream is WTF happened in gold. Okay, well, we're just going to leave that title there, but I got to get going, guys. Good talk, good stream. I had a lot of viewers today, too, so that's great. If you guys haven't subscribed, make sure you subscribe and click that bell icon. This is a channel that you're going to want those notifications on. It's a lot easier to find the stream when they do that. And when I post videos, I'm not very consistent with it. I need to, when school starts again, hopefully I'll be able to be more consistent. But this weekend, when I went to go and record and everything, I couldn't do it. I was not ready. And the kid was just, it is like too much of a weight on my mind. So I guess oil and DAX are not your cup of tea. Well, I mean, I suppose I could try oil. The issue I have with oil is I just don't understand the politics of the oil markets very well. I find them, I would have to do a lot of study on that. And I would need to find some sort of an edge there too. You know, what is it that is going to allow me to predict future orders in the oil markets? You guys have given me one idea about using the close, but I don't know if that'd be enough. So, but I would much rather just, you know, only risk $5 on a treasury trade. So, hey guys, stay profitable, friends.